Let's talk about the economic hurricane that's taking place in the market today. Many of you have never been through a hurricane. Some of you have. Once you've been involved in a hurricane, regardless whether it's a category 1 or category 5, it's something you'll never forget. Why is a hurricane so much more fearful than, let's say, a tornado? Well, a tornado is very specific. It's captured in a very small cone, has a very small path, quite destructive, but it's very minimal when it comes to overall macro effect. A hurricane, which I've been through 2 or 3 in my lifetime, is more like having a 300 to 500 mile wide storm that doesn't quite know where it's going to go. You have a lot of time in advance to prepare for it. You have all kinds of ways to either evacuate or hunker down to figure out how you're going to protect your property. But when you have a hurricane coming at you, whether it's a category 1, category 3, category 5, what you really know inside of that hurricane are going to be dozens and dozens and dozens of tornadoes. So whereas a tornado is a singular event, very deadly, very dangerous, very specific, a hurricane is like 400, 500 tornadoes that last for days, if not weeks, before it finally plays out. I liken today's economic situation as being like an economic hurricane. So what we're dealing with is uncertainty in things like interest rates. We're dealing with uncertainty in terms of artificial intelligence and data centers and how that technology is advancing the market and how much in terms of trillions of dollars is being redeployed out of other asset classes to support artificial intelligence, data centers, and all the things that wrap around that particular sector. Well, let's just say we have a static point in life. Let's say today we stopped the market and froze it. No one can move money, and we had to do an accounting tabulation. No buyers, no sellers. We had a static point in terms of allocation of all the money in the world and where it sits at one moment in time. You'd have so much money in cryptocurrency in each one of those cryptos that's involved in that particular asset class. You'd have so much in real estate, not land, not multifamily, not commercial, real estate in general, traditional real estate. And you get my point. If we had to do an allocation of where all the money is located, all the assets in the world are located at one point in time, and we said that's the starting point, then that would be a flat, smooth ocean, not even knowing a hurricane's off over the horizon. Today, you don't have any moment in time that's static. The world moves 24 hours a day, 7 days a week. Markets are open all the time, everywhere for the most part. After hours trading, before hours trading, during the day. Now today, the average investor is trying to outrun algorithms. It's trying to outrun computers. We're talking about quantum computing being possibly viable in 2030. We're talking about AI moving at 4 or 5x, literally monthly, if not weekly. The question then becomes, how efficient do investors feel they are in competing against competition for arbitrage and assets in the market, knowing that you're being outpaced, outthought, outmaneuvered by systems and software and programs that are moving faster than the speed of light? Quite scary. The words I saw today when I looked up and said, what are most investors thinking about on this Monday? Well, let me tell you what they're talking about. Number one, the Iranian war. Number one. Why is the war such a big deal? I mean, we haven't had any boots on the ground. It's clear the American military forces have dominated Iran and pretty much neutralized them. But today, the Iranian war is number one in everyone's search engine today when we looked it up. Why is that? Because that is the center of the hurricane. It's the eye of the storm. And what that does is the eye of the storm spins the fastest, it has the highest degree of wind, highest degree of certainty, but it's also the calmest point inside the eye. But what it spins off becomes larger and larger, and the after effects, the residual effects of that spinning of that hurricane affects bond market, it affects real estate, it affects banking, it affects the stock market, it affects oil and gas, it affects midstream infrastructure projects, pipelines, ports, terminals, global transition, cargo ships. It has affected everything on the planet that relative to the price of oil and gas and the movement and transportation of goods all over the world have been directly affected by the Iranian war. That is the hurricane we're dealing with today. And it is a category 5. So after they looked online and said, hey, what are we looking for today? Well, I want to see if the Iranian war And the peace agreement that President Trump says is going to happen, is it real? Or is it just another statement that has really no meat or substance to it? Is it just an acquiesce to getting the terms agreed to in order to allow them to say, let's take a pause? The Iranians take a pause. The U.S. takes a pause. The markets get over-jubilated. They get excited. They get thrilled with the idea that maybe this is all over with. So now we can come out of our shelters for this hurricane. We see the outer bands. We see that maybe things are getting less dark. The horizon's not quite so full of storms. We say, well, maybe it's over. Maybe this is the chance to really get back out and do our normal thing. Let's invest. Let's go back to the stock market. Let's go back and invest in real estate. Let's forget interest rates, because I'm sure this inflationary trend we've had since oil took off, I'm sure it's going to go away. The reality is that when you have the Iranian war is number one, right? And the second one is the stock market. What does that tell you? Well, that's what everyone's going for. Lots and lots, billions, if not trillions of dollars around the globe have been all in a safe haven called bonds. And those bonds are where you want to go if you don't put it in traditional banks. So during times of crisis and during times of economic uncertainty, you go to safe investments like bonds, money markets, CDs. You pull out of the markets because you don't know where the end of that storm is, which side of the hurricane you're on, and where that hurricane is going to finally end up. But you know you're in a storm, or you know there's a storm out there. You're just not quite sure how it's going to affect you. So what do? I look at the Iranian war. I look at the stock market. I take a look and see what's going on with economics overall. The fourth one down says, again, Iranian war. It popped up twice. The next one says Strait of Hormuz. Now it's 4 times. Gasoline, 5 times. Why is gasoline on the search list? Because people are trying to relate consumable energy every single day and how the cost of energy is totally sucking up disposable capital. It's affecting logistics. It's affecting construction. It's affecting the data centers. So what I propose today is you think about the words being searched today. It tells you what the market is thinking. It tells you what investors are thinking. It tells you what consumers are thinking. And their number one concern is this peace accord or this peace proposal with Iran legitimate, or is it simply a way to stop the hornet's nest from stinging? Is it really going to be something that allows oil prices to come back to a marginal rate that allows everyone to go back to somewhat normal energy costs? Has the damage been done? Do we have demand destruction that's going to take months and months to reapply confidence in those areas where the demand destruction occurred? Can we count on the Iranians and those that are out there working with them to really live up to their word? I doubt it. So I look at this kind of information every day for one reason. It's not what I think is going on. It's what the perception of all the investors and those that are out searching for direction in their markets, direction in their portfolios, direction in global economics. It's the search engine that's telling us what they're thinking and what they're getting back in terms of information from their searches that puts the emotions of the market in play. The emotions of a hurricane are simple. You've been through one before and you don't waste any time. You prepare, you hunker down, you get your supplies, and you say it's going to be a wicked storm and it's going to last a long time from front to back of that hurricane. It's 300 to 400 miles wide. Those who've never been through it before, but they have heard about it, maybe heard about the 2008 financial crisis, they're saying, I don't think it's the same. It doesn't look as bad. I don't know what these clouds are, but I heard that if you're in a hurricane, it's pretty wicked. I'm going to take my time, but I'm going to have some safety precautions. I'm going to have some money in bonds, some in CDs, some liquidity. I'll put some in the stock market to get a little higher rise, but I have my finger on the trigger. I'm going to be ready to jump and get out. It truly is coming my direction. And last but not least is probably 15 million of the 22 millionaires in the United States. They've never been through a downturn since 2008. Today, if you talk about the 2008 financial crisis, it sounds like you're talking about World War II. Investors sub 45 years old didn't experience it. They were in college, medical school. They were starting their engineer practice. They were young farmers and ranchers. They were young entrepreneurs that said, I don't know what you're talking about. I haven't seen a downturn in this market in 17 years. The longest bull run in American history happening now. The question is, are you prepared? Do you believe the arm waving? Do you look at the search words? Do you analyze it for yourself? Well, here's how I see it. Having been through multiple economic hurricanes since 1985 when I started my career, I can tell you the lack of normal activity, the normal balances between debt and stocks and equity and alternative assets and geopolitical pressure, there's more turmoil today in a given moment than I've seen in my 40-year career. I will tell you this, I can't predict a hurricane. I can't predict where it's going. I can't predict how severe, and I sure can't predict the outer bands as when they're going to start coming on shore. In my view, it's very simple. Today is the day to actually hunker down and focus on the what if. If there is an economic hurricane coming to the market, it's already coming, and the outer bands started about 2 years ago, in my opinion. Today, we're getting to some of the inner bands, and there's a lot of chaos on the horizon. But investors are acting like it's a sunny day, time to go swimming, play golf, sit under the tree. Don't worry about the indicators. Don't worry about the signs. Ignore them. All is okay. You're being lulled to sleep. Thanks for listening.